asked a lot recently how my credit score impacts what interest rate and then inevitably what program that I'll qualify for. There's a lot of ways to answer that question, but I'd like to dive pretty deep into some specific answers that you need to know so that it affects you to the positive side. First off, credit score absolutely and obviously impacts your interest rate. The biggest way it impacts it is depending on which product you're going into. Fannie Mae or Freddie Mac, which you've heard of, is going to cause the lenders to charge higher interest rates, or if it's a 720, you're going to get a better interest rate than if it is a 680. Now, why is that? That's another question that I'm asked usually, and the answer is, depending on your credit score, and why we have credit scores is to tell us whether or not you will, or the probability of you actually making your payments. The higher your credit score, the higher the probability that you'll make your payments on time. Thus, the bank's taking less risk and able to give you a little bit better interest rate than potentially your neighbor who has a lower credit score. If your score is lower than what you'd like it to be, there's actually a couple things you can do to improve your score. If you will give it time, it will repair itself. There's a couple of things that you can do that will speed up the process, and that is using credit cards wisely. If you can use credit cards wisely and charge limited amounts on your credit cards, keeping the balances below 30% of what your limit is, that can often have a large impact on your credit score or speed up the recovery process. Quick tip: when shopping for a mortgage, make sure that you know exactly what your credit score is. If you're not sure what your credit score is and you're shopping around asking multiple different banks to give you their best interest rate and closing cost combination, and companies are actually quoting you without knowing what your credit score is, both you and the lender are actually doing yourself a disservice. There is huge variances in interest rates based on what your credit score is. If you're a 680 and you thought you were a 700, your score could vary as much as 1/4%. Do yourself a favor, find out exactly what your credit score is, and provide potentially even a copy of your credit score to lenders so that they can give you a very, very accurate quote. It'll save you stress and time in the long run. Okay, to summarize, credit score is obviously important. You got to figure out what your credit score is, figure out what you've done wrong, figure out if there's ways to improve your score. If need be, contact a credit repair company to have your score repaired. Find out what your score is as you're shopping around so that you can provide an accurate credit score. You're going to need to make sure that it's within 2 weeks so you can provide that to lenders as you shop around. This will give you the best opportunity to lock in the best interest rate at the time.